I've given a number of opinions here already on interest rates, their impact on the market, etc. But I keep seeing the questions flooding in, so I thought I would do a slightly deeper delve into interest rates and really what it means or how it impacts the market here in Winnipeg, Manitoba, Canada. So stay tuned. Hi, I'm Jennifer Queen with the Jennifer Queen team and RE/MAX Professionals here in Winnipeg, Manitoba, Canada. And if you don't already, be sure to hit that subscribe button below so that you continue to see our content. We are always trying to put out content that we think our clientele finds valuable. So if you've stumbled upon us, welcome. Hope you like what you're seeing. Without further ado though, I am going to get into the matter of current interest rates. I find anytime there's a change in the market, whether it be a fluctuation in a positive or negative direction, the first thing people start to ask is, what does this mean for me? And of course, that is important. But what I'm going to say today is that my feelings on the matter really remain unchanged regardless of where interest rates are currently sitting. Also, and I might be biased, I am in real estate. I personally invest in real estate. I believe in what I sell. I believe in buying and holding real estate. So I might be skewed one way, let's be honest here. But if you ask me, real estate is never a bad investment. As long as you can make the payments and that they are comfortable and that you have run all the worst case scenarios. Also, as long as this is a buy and hold strategy. If you are looking to get into the market on a speculative basis, then that's different. My advice might change. If you plan to flip, my advice might change depending on market. But without further ado, here are some factors as to why I'm really unfazed by the interest rates regardless of the market. 1, people buy houses because of lifestyle changes in general, not necessarily because of interest rates. So I should preface this, of course. There are some people that purely look at the market from an analytical perspective, but they are definitely not the majority. Rather, the majority of people are buying houses for a variety of personal reasons. I always call them the big Ds. So diplomas or degrees, you're graduating, it's time to get started. Diapers, babies are on the way. Diamonds, you're getting engaged, buying your first marital home together. Divorce, downsizing, sometimes death, sometimes difficulties too. But it's almost always personal reasons. Sure, interest rates can, and we have seen them impact the market, but look at that behavior historically. We're talking a few months of pause, a few months of nerves, especially in Winnipeg at least. I know in other markets, particularly in the States, 2008, 2009 were rough years. So yes, there are periods of time in which there has been a little bit more strife spread out over a long period of time, but I'm talking specifically about the Winnipeg market. And we just really don't experience those periods of long strife here. It's just not something we've historically seen. Again, I always reference this, but look at the last 50 years of real estate in Manitoba. And if you notice in all of those years, property values here have gone up with the exception of 3 years, mostly two, I think, in the 80s, one in the 90s, in which property values did decline by about 2% in those years, maybe a little bit more than 2, but definitely under 3. And they rebounded the following year. And in 1 year, I think they rebounded by 8% the following year. So honestly, buying and holding in Winnipeg has always been quite a safe investment. You also have to remember too, that if somebody is, for instance, in the diapers phase, maybe they'll put off their decision for a little bit, but these are personal decisions. So a house, if it's getting too small for your growing family, yeah, maybe the interest rates will scare people for the interim. But we also hit a period of adaptability and where these new rates become the norm, where all of a sudden we see people getting more comfortable with the rates and putting their needs first and saying, so what? It means I pay a little bit more now, but there's always that trade-off between the pain of paying the mortgage or the pain of being in a space that just no longer works for you. Which leads me into my next point. Expectations really do adjust. Case in point, in 1971, when the rates hit 7.33%, what a lot of people initially did was panic and say, we're not going to buy a house until the rates come down. Well, if we look at interest rates in the 80s and then 90s, if you had waited, you wouldn't have bought a home for 22 years until 1993 is when the rates ultimately came down. Can you imagine somebody, now that I've said people buy and sell mostly for personal reasons, waiting 22 years to wait out that rate hold? I sure can't, and I can tell you as well that that was not the case then either. People did continue to go about their normal lives once they got used to the rates. We hear tons of stories from the 80s of people having mortgages in the 12 to 18% range. It was the necessary evil at the time. It wouldn't have been fun, but people got through it. To put this into perspective today, let's look at today's rate. 22 years ago from today, the average home price in Winnipeg was just above $100,000. I think it was $104,202. Now we're looking at, in late 2023, at an average sale price of closer to $369,000, almost $370,000. Can you imagine waiting for that period for interest rates to come down if we're in a similar cycle to what we saw in the 70s? I sure can't. That's a lot of equity lost. We're talking a 254% increase in property values in that period of time, which is pretty substantial. And in all honesty, I think outweighs the interest you would pay on a mortgage in that period of time. Number 3, history is always the best predictor, I find as well. Now, if we're looking at interest rates over the last several decades, I believe 50 years of history at least, what we will see is that average interest rates, what you'll see is that anytime you're in that 6 to 8% range of interest rate, you're actually doing pretty well. This is the historical average for interest rates. We have also experienced several strong sellers markets when those rates were present in Winnipeg. So Winnipeg has had quite competitive periods in that 6 to 8% interest rate area. And in all honesty, I don't think that's going to change. I think there's just a period of adaptation right now. Another factor, 4, is the population. We are still seeing positive growth in Manitoba in terms of population. Our net migration is positive, and the amount of people being added to Manitoba every year is increasing. And if you look at the economics, supply demand says that as long as there are those drivers, more people coming into the province, we're going to need more housing for them. However, I've been keeping a close eye, particularly since the pandemic, because we saw some real interesting behaviors in that sector. And what I'm noticing right now is the housing starts aren't where they should be to meet that demand in the coming years. Number 5, timing is everything. So for a few reasons. So a lot of people think when I say this that we can time the market, plan to list at a high, plan to buy at a low. No, that doesn't generally happen. Usually if you're buying at a high, it also means you're selling at a high and vice versa. There are a few people that are exceptions to this rule, but I assure you it wasn't because of their prowess in terms of being able to predict the market. It was pure fluke. And super grateful that that happened for them, but they had no idea. Essentially though, time, when I say timing the market, I generally mean time in the market. Again, like talk to anybody that bought 3 investment properties 10 years ago, they look like geniuses, right? A lot of people buy real estate, hold it, and they always come out ahead here. I am one of those people. I am no genius, but I also know that buying and holding is definitely a long-term path to wealth and also income generation. So that is what we are doing with our portfolio. We are not panic selling because of interest rates. There's a lot of people out there that need affordable rentals too right now because gosh, that's getting tricky, but I'll get to that as well. If you are a flipper, I am sorry, because this advice is probably not for you. Flipping is truly not my wheelhouse, never has been, never will be. I have always believed in buying and holding property. From a flipping perspective, I guess it could be argued that I have bought fixer-uppers, renovated them, but it was always with the intention of renting them out and securing higher rents on them. Fair rents, I am no shark. Number 6. People will always get creative. If your dream is to do something so specific, people will stop at nothing to really achieve those dreams. And I see it time and time again. I started seeing it a little bit more in the pandemic when things were getting really competitive, and now people were looking for houses with secondary suites or with good layouts in which they could have perhaps a roommate to offset costs, just to get them into the homes they wanted. They are willing to sacrifice some comfortability to get themselves into a home and get themselves at least to a point. Maybe it's not for forever. Maybe they have a tenant for a few years until they've had some promotions at work, whatnot, but it's to get their foot literally in the door. I've also noticed a few more tenants in common arrangements, which is cool. Joint tenancy is the more common form of ownership here, and that's essentially when you buy a house with somebody, you're both on title. If one of you passes, the house goes to the remaining owner. So whereas tenants in common is a little bit different. In that situation, the ownership is different. You actually specify like who owns what percentage of the home, and then should one party ever pass, that other party does not necessarily inherit the home. It goes to the estate or the trust that the other party has established. So we're seeing that a little bit more when it's two friends or people that are even, I've seen apps for it coming out of some larger cities in Canada, not here in Winnipeg, but where it's like a connection app where you sign these agreements and essentially agree to co-own a house with somebody else, but then you both retain a portion of that home and those rights for yourself. It's a really neat arrangement, but again, it's something we were trained about in real estate school, but it wasn't really a thing. Like, we very rarely saw it, but I'm seeing it more and more on the titles I'm pulling for listings we're taking. So I'm thinking that's a pretty darn cool way to navigate that. And this is not legal advice, I should add that as well. Like, before you go and enter into any of these arrangements, be sure to talk to a lawyer first. This is definitely something I see and something I think is cool, but you want to make sure you get those structures set up properly so that there's no discrepancy in the event there is ever a dispute, which hopefully there won't be, but get it on paper. Number 7, when interest rates are higher, we start to see people adjusting expectations. So for instance, we had some buyers recently that were looking for a specific home at a specific price point. They had a rate hold on their mortgage. They were struggling to find what they liked. Maybe they were a little more specific in what they were looking for, and that's okay. But essentially, when their rate hold ran out, it meant that we now had to go back to the drawing board because their affordability level had reduced by about $30,000. And they were fine with that, but it also meant having those tough discussions about really adjusting what a realistic expectation is for their next home. Number 8 is understanding micro markets. So real estate is super local, and even within local markets in Winnipeg, there are micro markets. There are some markets here that are super susceptible when we see downturns in the economy. There are areas that they didn't even notice. It was just a blip on the radar, but property values don't change, and they're very, very unimpacted by the interest rates. So knowing those micro markets, and again, I don't expect you to know these, reach out to a realtor. It can be me, but reach out to a realtor and get that information so that you know what to expect based on market. Number 9, I always go here and I apologize, but there is always the rental argument. So you know what I'm going to say if you've watched any of my videos covering this topic. So I already apologize in advance, but you are paying a mortgage anyways if you are paying rent. You are just paying somebody else's mortgage when you are paying rent. Of course, the exception to this is if you live in your parents' basement or have a super sweet arrangement living somewhere free of charge or very minimally. But in general, you are paying rent. payment. So put yourself into the mind of the landlord though in this scenario. They have a level of expenses that they are trying to cover with those monthly rents. And what we see in a market where interest rates start to go up, and perhaps they're on a mortgage that is now fluctuating as a result of the interest rates, what we're going to see is an attempt to recoup those costs by way of increasing rents. Now, depending on your agreement, your lease, that might not be feasible. You might be locked in at a lower rate. Sure, then you might want to reevaluate. If you look at the average rents in Winnipeg over the last couple of years, they have increased along with the interest rates. And number 10, this is a season. So kind of akin to what I said earlier about the people adapting and getting used to it. It is just a season. Just as the interest rates of 2020 were though, so are these. What I will say, and I hate to say it because I love those interest rates, is those were truly unprecedented interest rates. We will probably not see rates like that again in our lifetime because they were just so low and in all honesty weren't keeping up with inflation, right? So it's not a sustainable level of interest rate payment. If your concern is that your home might decrease in value, just always remember that this is a season and look at those historical averages. Look at the track record over the last 50 years and how if you could just hold on for another year, all was made up in those 3 negative years of the last 50. If you always come from a perspective of this being a season and not forever, right? Like there's going to come a time where interest rates do level out and maybe there's better rates to be had and we can look at refinancing then. As long as you can always keep up with those current payments, you're okay. This is just a season. Which brings me to my last point, which is the cost of action versus inaction. So just as there is a cost to taking action in any given circumstance, you have to also look at what inaction might do to you in your situation. We always need to look at not only the financial side of things, but also the emotional side of things, the mental side of things, as well as the psychological costs of taking action versus not taking action. There's no right or wrong answer for this. It is honestly, it is a case-by-case basis, and only you know truly the right answer for you. But what I'm going to say is these interest rates are here for a bit. We're going to have to get used to them. It is the season, as I just said, but we were doing really good in 2020 and 2021 and even into 2022 with those rates. They were at rock bottom prices. And I honestly think at this point that it's time for us to just adjust to the new normal. But what I will always caution you against is listening to the news and just taking those headlines and thinking it's a worst case scenario. The market is tanking, nobody's buying, and real estate is a horrible investment. I have not ever seen that to be true in the Winnipeg market. Like, it's just been a stable, upward trending market, and it always has been a safe haven for real estate investment as long as you can buy and hold. So do it if it's right for you. Do it if the payments make sense and you're comfortable with them, and plan to have some longevity with those plans. Again, I'm Jennifer Queen with the Jennifer Queen team and RE/MAX Professionals here in Winnipeg, Manitoba. Thanks for watching. If you found value in this video today, please be sure to hit that like button. It really does help me determine just what to record next. Also, be sure to subscribe if you haven't already, and feel free to comment below on what you think the interest rates are doing. Thanks again for watching.